to record the the exchange rate differences. Okay, either it's a profit or loss. Okay, remember, either it's a profit or loss, we must have to record the transactions into the system. Okay, how we are going to record that one into the system means okay, now let me okay now now let's say, for example, I will give you a small example. 01st July 2022. Okay, on 1st of July we have, see, and also remember the foreign currency revaluation, it is applicable for GL accounting, vendors and customers. Remember, okay, I will explain you. Maybe I'll explain you from the beginning once again. Okay, the FC revaluation is applicable for as follow. Remember, one is a GL, general ledgers, means for when we are going to calculate foreign currency on general ledgers, then when we borrow, suppose if we have, remember, if we have any loans, if we have borrowed, if we or if our organization borrowed loans from outside, outside means other than local. Suppose in India, okay, some we have borrowed loans from the outside of country, then the currency what we bought the loan, okay, local currency is in India. Then outside of currency, let's say we bought loan from the, let's say, Singapore, from the Singapore currency is a Singapore dollars. Okay, we must have to make the payment, either interest or full payment or installments also, we must have to make the payment into their local currency only, then only they will agree, right? Then general ledger accounting, then the vendor, on vendors, say the situation is that when we deal or when we post business transactions into other than local currency means the vendor related transactions, we are not going to dealing the vendor related transactions, means maybe we are purchasing the raw material from outside of India, maybe we are taking service from outside of India. Okay, it's a depends on the scenario. Okay, now the the I mean, on this situation also, we must have to calculate the foreign currency revaluation, because at the time of payment, okay, whatever it may be, advances, whatever it may be, the transactions which we are going to post into other than local currency, then the remember is the customers. Okay, customers cases also, okay, when we pass the entries, okay, customer cases also, when we pass the entries, but customer related, we are not going to record the transactions into the system or customer related. Okay, just for your information only. Now, okay, now the foreign currency revaluation is applicable, okay, for three things. One is a general ledger, another one is a vendor, another one is a customer, remember. Okay, then now I will explain you the scenario. Okay, for general ledger accounting, okay, if for general ledger accounting, I have already explained the scenario. If the organization is borrowed loan from outside of the country during the month end, while making the interest amount to that particular bank, we must have to make the payment in their local currency only. Okay, most are the cases the questions will come from the interview. Remember, this is the very important one, and for your interview also. And also, not only for interview, you must have to aware of this one, what is the foreign currency revaluation. The most of the questions will come from on vendor cases only. Remember, most of the cases we need to focus on vendor transactions only. Remember, I will explain you the business scenario. Okay, sorry, I'll explain you the business scenario. Okay, now let us talk about the vendor scenario only. Okay, now remember, 1st of July, I'll mention 1st of July 2022, we have posted in a vendor vendor invoice. The rupee is a, let's say for example, is a 5,000. Remember 5,000 USD. I will mention here is the currency is a 5,000. Okay, Singapore dollars. Let's say for example 5,000 Singapore dollars. Now on that day, on 1st of July, my exchange rate, when the transaction was happened on that day, my exchange rate was in between the currency, let's say 48.50 something it was there. Okay, on 1st of July. Now remember, now what is the total amount? 5,000 USD into, then the amount, okay, 2,42,000, okay, 250 rupees. It is in local currency, in local amount in, remember, amount in local currency. This is the amount, okay, what we have seen. Okay, it's after conversion from SGD, from Singapore dollars to Indian rupees. This is the local currency. Remember the scenario, it's the important one. Even it will be useful for your interviews also. They must ask you the question. Okay, they must ask you the question. And also, let's say for example, okay, on 1st of July, we have posted the invoice. Now the terms of payment. Remember terms of payments. About the terms of payment, I have already explained. Terms of payment means when we need to make the final payment to the vendor. When we need to make the payment to the vendor, that, okay, that is going to calculate based on the, okay, terms of payments. It will play key role. Okay, it will be decided by the, okay, due date. Okay, okay, according to that net baseline date, the system is going to calculate the, okay, the net due date. Now let's say for example, the terms of payment we have given is a 45 days. 45 days means after, once we perform the business transactions, after 45 days only, okay, we have to make the payment to the vendor. Remember, then the moment 31st remember, I will mention once again here the payment date. Okay, when we have to make the payment to the vendor, the payment date, I'll take this one. It's a little bit this side. Okay, now this is the date we have posted, invoice posted date. Okay, now the invoice date I will mention here is the, remember, invoice posted on. Okay, invoice posted on, remember. Then the payment date we have to, when we have to make the payment, okay, payable date. Now we have given the 45 days. That days, after 45 days only, I mean, we can able to make the payment, because that is the due date. Means the 15th of August, the due date will fall into the 2020 to 15th of July. Okay, because from 1st July to 15th of July, total it will be the 45 days. Now, okay, payable date we have mentioned. Okay, 45th day means 15th of August. Now what will happen every month? And remember, the foreign currency revaluation, it is going to perform every month. And remember, the foreign currency revaluation note I will mention here, the FC revaluation in SAP, we need to perform at every month end. Remember, every month end means the last working day. Means, let's say for example, the last working day of the month is the 29th of July. Okay, for on 29th of July we have to perform the foreign currency revaluation run, because that is the last working day of the month. Each and every organization is going to close the, okay, the current period, and they will reopen the, okay, for next month periods. Okay, now, okay, now while performing the foreign currency revaluation month end, remember, now when I am going to perform the revaluation, I am going to perform, sorry, 29th of July. Okay, now is the 29th of 29th of July 2022. Remember, here you need to concentrate here. Now on 29th of July, Okay, just forget about all the things. Now the same, the 500 USD only, sorry, 500 Singapore dollars only. My exchange rate is a 48. Means it has been reduced. It has been the cost. What you could see. Now you can see what is the difference between both. What is the difference between both of these? Okay, sorry. What is the difference? What is the difference of this one? This minus this. Now the difference is a 2500 rupees. Means here it is a loss for us. What we could say, this one is a loss. Means when we posted the invoice at the time, okay, at the time what it is happened, the total value, okay, we have posted into the system with into the local currency 2,42,500 rupees. The moment the month end 29th of July it reached, then the exchange rate, the conversion exchange rate, the difference between both the currencies from 45.8 to it fallen into 48 rupees. Now my original value, my the current value, okay, which I have to make the payment, okay, which I have, okay, it is means this much amount, invoice amount, now it's a month end, okay, it has been reduced. Okay, let's say for example I'll take the example 49 rupees. Okay, 49 rupees, it has been increased, the value has been increased. Okay, if it is increased, if it is been increased, okay, it is a loss. Okay, it is loss for us. If the value is a reduction, means it is a gain for us. Okay, sorry, I'll take. Okay, now this is the, okay, loss. To whom it is a loss? This is the, okay, loss for us. Okay, now this is the loss for us because in at the time of invoice posting, the exchange rate was 48.5. Now during the month end 49 rupees, means 0.50 paisa, the value it got increased, means the 2500 it is loss for us, loss for our organization. Remember, loss for our organization. And how the accounting entry is going to remember one more thing. This we can say, okay, sorry, this we can say the loss. Okay, this we can say in SAP terminology, unrealized loss. Unrealized loss. Remember why we are saying this is a unrealized loss. There is a, in SAP we have the two type of concepts are there. Okay, in SAP I will mention here is a, okay, what is remember, what is what is unrealized loss, what is the what is unrealized loss, then what is realized loss. Remember this, you need to understand here, you need to thorough in this one. Okay, this is also in interview question, they must have to ask you, you have to explain in the interview with this example. Okay, with this example. Okay, remember I'll explain what is the unrealized loss. Okay, if we have not made, if we have not the payment, if we have not made the payment to vendor, the amount, the loss or gain, we can say unrealized. Okay, see, the meaning here is that here you can see here, when we are the invoice posted on 1st of July, then the due is a, okay, 15th of August, means next month of 15th. Okay, we have to make the payment, but we are performing the foreign currency revaluation. Remember the FC revaluation, when we are performing, the last day of the current month. Then remember here we have not made the payment until now to this vendor, means the due is the next month, the due date is the next month only. But for this month end we have to show whether the we are, I mean the amount, the whether we are loss, we are running in, I mean the because of the exchange rate any losses are occurring, any, okay, any but this is not the original loss. Remember, the entry what we are going to pass, it's unrealized, means before making the payment to the vendor, if we perform foreign currency revaluation on this particular vendor, that we can say unrealized loss. Why unrealized loss? In the sense, we do not know at the moment how much, either it's a loss or profit, we do not know, because and at the same time as soon as we pass the entry on 29th of July, the same entry will get reversed in the first day of the next month. The reason being that at the moment we do not know. Whenever we are making the payment to that particular vendor, then only we will come to know, okay, now 15th of July, now let us assume the due date, sorry, 15th of August. 15th of August, we are making the payment to the vendor. Now, while making the payment, while on that particular day, we have to make the payment same 5,000 Singapore dollars only. But maybe on the day might be the exchange rate might be the 48 rupees. Okay, if it is a 48 rupees, then we will gain is a 2,500 rupees. We will gain, means the 15th of August only we will come to know whether, okay, we are gaining or loss. At that point of time, what we can say, while making the payment, okay, we have made the payment. Okay, we'll take the scenario. This is the scenario is for, okay, this is this is for, okay, before, okay, the foreign currency, okay, I'll mention here the FC revaluation for before making payment to vendor, means we have not made the payment. The scenario number one, if you want, you can take it this one, the scenario number one. Okay, this is also important for, then let us take the one more. Okay, take the second scenario. I will take the same example. Now I will take the same example. Now you can see here, okay, now what is realized, what is unrealized, hope you got. Okay, unrealized, what is unrealized means before making the payment to the vendor, we do not know whether it's a really loss or really, okay, profit or loss. Okay, now when we are making the payment, the original payment to the vendor, then now we will come to know, okay, it's a, originally it's a loss. Okay, now let's see. Now, while what is realized loss? Okay, while making the payment, okay, when we make the payment to, or when we clear the, when we make the, okay, vendor payment, then we need to calculate, FC revaluation. We will come to know, how much realized loss or gain. Remember, see, after making the payment, now let us, scenario number one we have seen. Now the scenario number two, let us see here what will happen. Now the FC revaluation I am running here is a 29th of July. Okay, now I am just removing this one. Okay, let us change. Okay, now I am, okay, the 15th of August I will do the payment. Okay, I will do the payment 15th of August, the same for 5,000. Okay, I'll remove this one. Okay, hope you got, I mean, unrealized loss. Okay, it is clear for you, hope. Now the same on 15th of August, I am going to make the payment. The each USD is a 48 rupees. Let us assume 48 rupees what I am making the payment. Now this I'm just removing. I'll just remove this one. Now 48 rupees means we have, at the time of invoice posting, the value, the exchange rate was 48.5. Now when we are making payment to the vendor, okay, whatever it may be, okay, 48 rupees it is there. Now it's a 2,500 rupees, that difference is there. This is the means 48 0.5 minus 48 means 0.5 we are gaining, means it is a gain for us. It is the 2500 rupees, it is the gain, realized gain. Realized means when it is a realized, we have made the payment to the vendor, but there are no open items to this particular vendor. Okay, when we made the payment 15th of August, we made the payment, means we have cleared the vendor invoice on 15th of August. Then there is no, okay, open item there is no open item, okay, which is relevant for this vendor. Okay, now when I am going to perform the foreign currency revaluation for the month of August, remember for the month of August is the 31st, which I am going to make the which I am going to get 31st of August, when I am going to, okay, post the foreign currency revaluation, then my system is going to post is a 2500 rupees is a realized loss. Realized loss, remember, sorry, the realized gain. This is the realized originally gain which I got, means okay, now this is the what we have seen now. Unrealized loss, if it is a loss before making the payment, either it's unrealized loss or unrealized gain, when it will come into the picture, the scenario number 1 before making the payment to the vendor. Now the scenario number 2 is that when the foreign currency revaluation of, okay, after making the payment to the vendor, then the originally we will come to know whether it's a loss or loss or realized gain. This we can call it as a, okay, realized. Okay, hope you are clear what is the difference between unrealized and realized. Okay, there's just a small, just give me 2 minutes time, I will explain you the what are the accounting entries which are going to, okay, pass. What are the accounting entries which are going to, okay, pass. Okay, when if there is a unrealized loss, accounting entries, remember this is a also we have to explaining in interview accounting with accounting entries. Okay, now when the scenario number 1, the scenario number 1 is the if it is a unrealized loss. Okay, if it is a if it is an unrealized loss, then what is the accounting entry? If it is an unrealized loss, what is the accounting entry? If we talk about the entry is a unrealized loss, then the entry is a unrealized loss account is a debit. Then the to balance sheet adjustment, to balance sheet adjustment to balance sheet adjustment account is going to credit. Remember, now this is the scenario if it is an unrealized, then if it is a, then the scenario number 2 will take it is a if there is a unrealized gain. If it is a unrealized gain, then what is the accounting entry? Balance sheet adjustment, the same, it is going to reverse the balance sheet adjustment account, it is going to hit, then it's a debit. Balance sheet adjustment account debit, then unrealized gain to unrealized gain account, it is going to credit. Then the third one is a okay, if there is a realized loss, okay, if there is a realized, remember the two here is a, okay, unrealized. Remember we have seen is unrealized means before making the payment. Remember, before making the payment. Now The scenario number 3, the accounting entry, okay, it's an if there is a realized loss. If there is a realized loss, remember. Okay, so what is the accounting entry? Then realized loss account. Realized loss account is going to debit. Then to yes, realized loss account. Then is a vendor account. Vendor account is going to debit to bank account. Then this is the entry if there is a realized loss. The last one is a if there is a realized gain. Remember, if there is a realized gain, what is the accounting entry? If it is a realized gain, okay, vendor account is going to debit. Then to bank account is going to credit. Then to realized gain. Realized gain account is going to credit. Okay, with example we'll see in tomorrow session, but these are the accounting entries what the system is going to generate during the foreign currency revaluation run. Okay, this is also for interview purpose also, it's an important one. We must have to explain the all these 4 entries. Okay, first you need to explain what is the difference between realized and unrealized. Then afterwards, if the interviewer will ask you explain the accounting entries, then we need to explain these 4 accounting entries. When unrealized loss, okay, unrealized gain, okay, realized loss, realized gain. Okay, now we'll see into the tomorrow session. Okay, we'll do the configuration for foreign currency revaluation, then we'll run the scenarios. Okay, we'll see that one.